The cryptocurrency market has plummeted. What caused this crypto winter and what happens now? Welcome to America Uncovered. I'm Chris Chappell. This episode is sponsored by Incognito. You probably know that companies are collecting your personal data, but you may not realize just how many. Dozens, maybe hundreds, most of which you've never heard of, and you have no idea what they're doing with your data. Incognito helps you stop them. I'll explain more at the end. So, brace yourself. Crypto winter is coming. Well, that sounds scary. On the bright side, at least there's no way this will be as anticlimactic as Game of Thrones winter. 7 seasons of build-up just for the Night King to be one-shotted in a single episode? Yeah, it's been 3 years. No, I'm still not over it. If you've been wondering why your friends who are into cryptocurrency are suddenly going bald from stress, it's because cryptocurrencies have lost $2 trillion in value since their peak in November of 2021. To put that in context, in just over 7 months, the crypto market lost nearly the same amount of money that the US spent over 20 years in Afghanistan. And people are bailing out of crypto just as quickly as the US left Afghanistan, also without warning or a well-thought-out plan. The most valuable cryptocurrency, Bitcoin, peaked above $68,000 per Bitcoin in November. Last week, Bitcoin dropped below $20,000, which seemed like a worst-case scenario. Until over the weekend, Bitcoin fell even further. There was a sigh of relief, though, as Bitcoin bounced back above $20,000 at the start of this week. Which means things are so bleak that people are celebrating going back to what they initially thought was the worst-case scenario. This would be like celebrating when a doctor tells you they were right the first time. They only have to amputate one of your feet. Bitcoin isn't the only cryptocurrency feeling the pain. Terra USD and Luna bottomed out, costing investors almost $60 billion. So many people were panic selling that major crypto lender firms Celsius and Babel froze withdrawals on their platforms. That's like being on a sinking ship and the crew says too many people are bailing out, so we're putting a pause on the lifeboats for a few days. Although, with this being crypto, that sinking ship could one day turn into a rocket ship and head straight for the moon. So what caused this crypto crash? There are a few factors. One is the fact that a lot of people invested in crypto during the pandemic, when money was pumped into the economy to make it stronger. But when the economy started to slump, people panicked and started selling off their crypto, causing its value to plummet. Because when inflation is out of control and every dollar counts, people would rather buy groceries than Whopper coin. Can't have a digital hamburger coin for lunch, no matter how hard I've tried. These massive sell-offs created a domino effect. The more the value dropped from people selling, the more confidence in the crypto market eroded, causing more people to want to sell. This caused a quick, massive decline across the entire industry. In April 2021, cryptocurrency exchange platform Coinbase went public. At the time, it was valued at nearly $100 billion. Last week, Coinbase was valued at only $11.4 billion, and they're in the process of laying off 18% of their staff. These layoffs are causing an even bigger hit to crypto confidence, creating a cycle that seems hard to break out of. And sadly, there's no crypto Night King to one-shot and end the crypto winter. So could this be the end of cryptocurrency as we know it? I'll tell you what experts are predicting right after the break. Welcome back. Is this crypto winter the end of cryptocurrency as we know it? Some experts predict that and are even hoping for it.
Is this the end, or have we hit the bottom?
Well, we definitely haven't hit the bottom. I kind of hope it's the end, or at least the beginning of the end, before more people have an opportunity to lose more money in this pyramid scheme. But, you talk about all the value that's evaporated. It's just market value. There's no real value in Bitcoin or any of the other cryptocurrencies. They simply have a price. And as long as people are foolish enough to pay that price, you'll have market value.
Yeah, Crypto is just a made-up currency that only has the value people assign to it, and isn't as valuable as it used to be, unlike a currency issued by the government. While many people think of Bitcoin as mainly an investment, that's not all it is. Many people living under dictatorships use crypto transactionally. It's a way they can receive and spend money without their government being able to control them or see what they're doing. Governments can block their bank account, but not their crypto account. It's a great tool for dissidents. And honestly, dictatorship or not, do you really want your government to know what you're spending your money on? The Ethereum blockchain can also be used to post things online that can't be taken down. So this is a great tool for posting things that dictators want to censor, but can't. Or posting things that you'll always regret and wish you could take down. Despite this, some experts say crypto is a Ponzi scheme and the inevitable end result of excessive gambling. Wait, isn't excessive gambling basically what the stock market is? Listening to people make bets on Wall Street sounds just like being at the horse track. GameStop slipping behind and AMC coming up the rear. Amazon is still the front runner. But wait, who's that suddenly in the lead? It's Rich Strike. He's done it. He's won the Fortune 500. Other experts are more hopeful, with some even saying this crash is healthy, since it will eliminate people making overly risky crypto purchases in the future. Well, that's an optimistic way of looking at things. It's like seeing someone fall down the side of a mountain and saying, this is a good thing. With 2 broken hands, he's less likely to play Russian roulette. That's not that crazy of a take, though. This crypto crash has been likened to the dot-com bubble burst in the early 2000s, when investors pumped money into different internet startups hoping to turn a quick profit. That ultimately led to a loss of $5 trillion for investors, and many, if not most of those companies, went out of business. That didn't mark the end of the internet, though. The internet's still here, as you can tell from the fact you're likely watching me on YouTube, most likely on your phone while sitting on the toilet. You think YouTube doesn't watch you back? And anyway, this isn't the first time crypto has crashed. In December 2017, Bitcoin plummeted 30% in one day and ultimately lost more than 80% of its value. It stayed pretty low for a couple of years, then it rebounded in a big way at the end of 2020. Is this latest crash just part of the pattern, or will it be different this time? The managing partner at Dexterity Capital, a major crypto trading firm, said this era of being able to get exceptional yield for nothing is over. This is when a lot of leverage is going to get pulled out of the system, and this will ultimately make the crypto ecosystem safer. As the Wild West days of crypto come to an end, crypto companies will have to earn back trust and confidence in consumers. And at least one consumer seemingly hasn't lost any confidence. Elon Musk, who said that despite the crash, he's still buying Dogecoin, which isn't a surprise, mostly because Musk is also still trying to buy Twitter, so it shows he's not afraid of investing in absolute dumpster fires. Musk's commitment to Dogecoin caused its price to increase by 10%, so I guess people are regaining confidence in it. But what can't be good for the confidence of Dogecoin is the fact that Musk and his companies are being sued for $258 billion for allegedly artificially inflating the price of the cryptocurrency. So I guess we're not out of the Wild West days of cryptocurrency just yet. Maybe we're entering a crypto Wild Winter West, which sounds like the most volatile West since Kanye. And this episode has been sponsored by Incognito. Whenever you do anything online, there's a huge number of companies that collect your personal data. Your name, your email, your home address, your social security number, your employment history, all sorts of things. And what are they doing with your data? They're buying it, selling it, and trading it like you're a commodity. Worse, the companies that are holding onto your personal information could get hacked. Like that time in 2017 when data on nearly 200 million US voters was accidentally leaked by a company contracted by the Republican National Committee. It exposed people's names, birth dates, and home addresses. And if a company like that can be hacked, so can all the smaller companies that buy and sell your data. This is why I signed up for Incognito. And I discovered that there were 76 data brokers that potentially had my private information. I had never heard of most of these companies, but they had definitely heard of me. Incognito forces these companies to delete your data. There are laws that allow you to do this, but if you want to do it yourself, you'd have to figure out the applicable laws, write letters in a specific legal way, and follow up to make sure your instructions are followed. Incognito handles this for you. 3 months after signing up, Incognito had already gotten my details removed from 19 of these data brokers, with 35 more in progress. And I didn't have to do anything after signing up. So check out Incognito using the link below, or go to incognito.com/uncovered. The first 100 people to use the code UNCOVERED will get 20% off. Get your personal data off the market with Incognito. Once again, I'm Chris Chappell. Thanks for watching America Uncovered.